Welcome back to Investing Talk Podcast.
Great to be here.
Today, we are really digging into one of the, biggest names in Bitcoin mining, MARA Holdings, a major player.
Absolutely. And our goal today is pretty focused. We're tackling that key question. Based on everything we're seeing, operations, financials, what's coming down the pike, is MARA Holdings actually a good buy right now?
Exactly the question on everyone's mind. And hey, before we get started, if you find this useful, please do hit subscribe, give us a like, maybe drop a comment.
Yeah, definitely. And if there's another company you want us to analyze next time, just let us know in the comments. We do look at those.
We absolutely do. So looking at the research, these sources, it paints this picture of stark contrast, doesn't it?
Yeah.
You've got this explosive growth on one side.
Off the charts growth, really. But then on the other hand, it's fueled by a significant amount of debt. And that's happening in a sector that's, let's face it, incredibly volatile. That's the tension here.
That really is the core issue, isn't it? The tightrope walk. So we'll look at how they've been operating recently, say, the last few months.
Right. Operational execution.
Then we'll drill down into the financials, the fundamentals.
Stability, profitability, that sort of thing.
And finally, look ahead at the catalysts. The market events that could really swing things in the near term, say, the next 3 to 6 months.
Exactly. Weighing up the track record against the balance sheet and then factoring in what's just around the corner.
Okay, let's kick off with operations then. Thinking about June through August this year, 2025, what really stands out about their mining performance and strategic moves?
I think the resilience in August is quite telling. The reports show they mined 208 blocks that month.
Okay.
And maybe more significantly, even as Bitcoin's price was sort of dipping, they kept adding to their stack. Their holdings went up to 52,477 Bitcoin.
Wow, over 52,000 BTC. That shows some conviction holding through a dip like that.
It suggests they're built to handle that short-term volatility, likely banking on longer-term price appreciation. That scale helps.
And that scale comes down to hash rate, right? The July figures seem to really emphasize their dominance there.
Oh, absolutely. The focus is clearly on hash rate leadership. The filings confirm they hit 58.9 exahash per second energized hash rate.
58.9 EHs. That's a massive number. Why is hitting that kind of level so critical, especially now, after the halving?
Well, post-halving, the block reward got cut in half overnight, right? So efficiency and sheer scale become everything if you want to stay profitable.
Makes sense. Less reward per computation.
Precisely. So analysts looking at their June setup pointed to that near 60 EHs ramp up, plus their energy costs, which are seen as among the lowest in the industry.
Okay.
That combination, the scale and the low costs, puts them in a really strong position in this new, much tougher mining cycle. It's about outlasting the competition.
And that scale needs feeding. They're not just growing domestically, are they? Tell us about this move into Europe, the Exayan JV.
Yeah, that's a really interesting strategic pivot. They signed a deal to buy a 64% stake in Exayan.
Which is part of EDF, the big French utility.
That's the one. It's expected to close in Q4 this year. And strategically, it's significant. It gives them a foothold in Europe, diversification. But critically, the deal documents specifically mention expanding digital infrastructure and pushing forward their AI ambitions.
Ah, AI again. So they're linking mining infrastructure to grid tech and AI compute. That's forward thinking.
It definitely hints at a broader strategy than just pure mining. It's something we need to keep an eye on.
Okay. And just quickly, their treasury strategy, holding all the Bitcoin they mined back in July.
Yeah, that was a conscious decision. It signals strong belief from management in Bitcoin's long-term value. They're treating it not just as cash on the books, but as a strategic asset, maybe even future collateral.
Running it for growth, not just current income.
Exactly, betting on higher prices down the line.
Okay, so that covers the operational push over the summer. Aggressive, resilient. Now let's switch gears to the financials. If the operations are that strong, you'd expect the numbers to reflect it. What are the fundamentals looking like?
Well, the top-line numbers are, frankly, pretty staggering. That's why MARA gets so much attention. Trailing 12 months revenue, ending June 30th, 2025, was $798.41 million.
Nearly $800 million. And the growth rate?
Looking at the annual growth for 2025, revenue up almost 98%, and EPS growth, over 427%.
Whoa, hold on. 427% EPS growth.
Yeah.
It's hyper-growth territory.
Yeah.
How are their margins supporting that kind of bottom-line explosion?
The margins are exceptional, even globally, not just for miners. Gross margin reported at 41.75%. Okay, that's solid.
Yeah.
But the net profit margin, it jumps to 85.02%.
85% net margin. How is that even possible?
It points to incredible operational leverage and likely extremely tight control over their biggest cost, energy.
Okay, let's just pause on that 85% net margin. It's amazing, but it leads straight to the big but in the reports, doesn't it? The leverage. How do they fund all this growth?
And here's the massive red flag. You absolutely have to factor this in. To pay for that expansion, the infrastructure, MARA took on an extra $2.65 billion in debt over the last year.
$2.65 billion in new debt.
Yep. And that pushed their debt-to-equity ratio up to around 54.2%.
Over 54% DE. Isn't that incredibly risky? What happens if Bitcoin tanks for a while? Couldn't that debt just crush them, regardless of operational efficiency?
That's the absolute core risk. It magnifies everything. High leverage means a downturn could be catastrophic for servicing that debt.
Right.
But the counter-argument in the analysis is that the huge profitability, that 85% net margin, acts like a massive cushion. It gives them breathing room.
A shock absorber.
Exactly. It lets them potentially ride out Bitcoin price dips that would simply bankrupt smaller miners with thinner margins and less scale. They essentially bought growth and resilience, but paid for it with debt.
So the high margin is supposed to protect against the high debt.
Yeah.
Interesting trade-off. What about their competitive advantages, their moat?
Right.
It's not just scale, right? There's this vertical integration aspect.
Precisely. The advantages are built in. Yes, economies of scale. Yes, cutting-edge tech, maybe some AI for power management. But the key is that vertical integration through owning their own Texas wind farm.
Okay, unpack that for us. What does owning the wind farm actually mean for their costs versus competitors?
It means they're not just price takers on the energy market. Energy can be, 70% of a miner's cost?
Easily. Sometimes more.
So by owning the source, they control that huge expense. They get predictable, potentially much lower power costs, plus flexibility.
Flexibility how?
They can potentially curtail mining, stop using the power themselves during peak grid demand, and sell that power back to the grid, often at a premium.
Ah, so they can make money not mining sometimes.
Exactly. It's like a dual income stream.
Yeah.
Mining revenue when power is cheap or normal, and energy sales revenue when power prices spike. That's a defensive edge most rivals just don't have.
So the Texas side is almost like a power trading operation that also mines Bitcoin. Okay. Aggressive operations, stellar growth, but heavy debt, offset by huge margins and unique infrastructure. Got it. Let's look forward now. What are the key catalysts, technicals, and maybe even rumors that could move the needle in the next few months?
Right, the near-term outlook. The calendar's pretty packed. First up, October 15th, that's the Q3 2025 earnings release. That's going to be critical.
What will analysts be watching for?
Bitcoin production costs, obviously. Any updates on the debt management strategy? And probably more color on that Exan integration and the AI plans.
Okay, Q3 earnings, October 15th. Then what?
Then, end of October, the 31st, Halloween, you've got the rebalancing of major crypto and mining ETFs.
Why is ETF rebalancing such a big deal?
Well, it can force huge amounts of buying or selling completely unrelated to MARI's own news. If their weighting changes significantly in key ETFs like WGMI or others.
It creates automatic demand or supply.
Exactly. It can really impact liquidity and short-term price action. Definitely a date to watch.
Got it. And then looking out to December?
December 5th is the scheduled disclosure date for institutional holdings, the 13F filings deadline, essentially.
Ah, so we see if the big funds have been buying in.
Yeah. If we see major institutions significantly increasing their stakes, that's a massive vote of confidence. It could solidify MIRA as a go-to name for crypto exposure in big portfolios, potentially attracting more institutional money.
Okay, so key dates noted. What about the charts? What are the technicals telling us right now for someone thinking about entry points?
Well, the stock's been in a bit of a consolidation phase recently, trading mostly between, say, $16 and $18.79. Technical analysis suggests near-term support around $15.35. Resistance looks like it's around $19.35.
And the trend?
Critically, the pattern looks pretty bullish from a technical standpoint. It's trading above both its 50-day and its 200-day moving averages. That's often seen as a strong positive signal.
Okay, so the trend seems upward. And what about analyst price targets?
The consensus target floating around the reports is about $23.13.
$23.13. So
Yeah.
potential upside of what, 22 to 31% from where it's been trading?
Roughly, yeah.
Huh.
Assuming those bullish signals hold and maybe some of these catalysts hit, it suggests the market is pricing in some positive developments.
Right. Which brings us to the speculation, the rumors swirling around. These could potentially accelerate things, right? What's the buzz?
There are a few juicy ones mentioned. The biggest, perhaps, is talk of a potential partnership with Tesla,
Tesla. Really? On what?
focused on clean energy, Bitcoin mining infrastructure. Maybe leveraging MARA's scale and Tesla's battery tech or brand, if that were confirmed.
That would be massive.
Yeah.
Huge validation, especially on the ESG front.
Absolutely. Game changer territory for perception. Then there's more talk about that AI angle we mentioned.
At the Texas site.
Yeah, the speculation is about building out an AI compute grid there, using that massive power capacity not just for mining, but for high-demand AI workloads for other companies.
Turning it into a data center powerhouse that also mines Bitcoin.
Potentially, yeah. Monetizing the energy infrastructure in a totally different way. Diversification.
And the last bit of buzz. Something about index inclusion.
Right. The potential for S&P 400 mid-cap inclusion, maybe by year-end.
Why does that matter so much?
It's about market mechanics. If MARA meets the criteria for size, profitability, liquidity, index funds tracking the S&P 400 have to buy the stock. No choice.
Forced buying.
Millions of shares, potentially. It creates this instant, systematic demand that can really boost the price, separate from day-to-day news.
Okay, wow. Lots of potential triggers there, alongside the risks. So let's try and bring it all together. Risk mitigation, the final verdict. What are the absolute key risks listeners need to keep front and center?
Two main buckets, really. First, company-specific. It's that leverage, that $2.65 billion in debt. Management needs to execute near perfectly, and Bitcoin probably needs to cooperate to handle that debt load comfortably.
Flawless execution needed. And the second risk, sector-wide.
Just the inherent sensitivity to Bitcoin itself and regulation. Profitability, even with those great margins, is still hugely tied to the Bitcoin price. A long crypto winter or unfavorable regulations could hit the stock hard, especially with that debt. High beta, high risk.
Definitely not for the faint of heart.
Yeah.
And yet, despite these significant risks, the overall analysis we looked at leans bullish. Why the optimism?
I think it comes down to a few things. Management has shown discipline in scaling efficiently. Those margins prove it. And the investment in infrastructure, the vertical integration, the AI hints that provides a structural resilience that others lack.
So the belief is the potential reward justifies the risk.
The sources seem to think so, yeah. They see the upside tied to Bitcoin's long-term adoption, plus this potential diversification into AI and energy tech as outweighing the leverage risk, assuming good execution.
So putting it all together from the source material, is MARA Holdings a buy right now? What's the consensus rating?
The overall rating presented is bullish, comes in at an 8.5 out of 10.
An 8.5. That's pretty strong.
It is, and the rationale boils down to that combination. Explosive growth, smart strategic moves like renewables and AI, massive operational scale, and a compelling technical picture heading into these Q4 catalysts.
For you, the listener, thinking about time horizon, is this a quick trade or a buy and hold?
The analysis suggests it could be both, actually. For savvy traders, there's potential volatility around earnings and news flow to play.
Short-term opportunities.
Right. But it's also presented as a compelling long-term holding.
Wow.
Way to get leveraged exposure not just to Bitcoin, but potentially to this evolving energy and tech infrastructure story.
Okay. So to wrap up, MARA Holdings clearly offers significant upside potential driven by incredible growth. But it's a big but. You absolutely have to weigh that against the high leverage and the inherent volatility of the crypto market.
Absolutely. It demands a high risk tolerance.
Yeah.
It's a calculated bet on continued execution and a favorable Bitcoin environment.
Which leaves us with a final thought for you to mull over.
Yeah.
We've talked a lot about the Xion deal, the AI compute speculation, the Texas wind farm.
Yeah, the diversification angle.
Exactly. So the question is, how close is MARA Holdings getting to being something more than a Bitcoin miner? Is it morphing into a diversified tech infrastructure company, maybe a kind of crypto-powered utility? That strategic shift is definitely something to watch closely in their upcoming reports.
A really interesting evolution to track. It could redefine what a miner looks like in the future.
Indeed. Well, thank you for joining us for this exploration of the analysis surrounding MARA Holdings. We really appreciate you tuning in.
Yeah, thanks everyone.
We'll be back next week with another look at the companies and numbers making headlines.